Ha ha! Hey, what is going on, crypto people? Happy Tuesday to each and every one of you. Good afternoon, good morning, good evening. Celsius Network is suing Tether for over $2 billion. 2 billion with a B. Interesting. I remember in the early days of this case, the community kept asking, when are you going to do something about Tether? What are you going to do something about Tether? When? 39,000 Bitcoin is at play here. 39,000 Bitcoin. That will certainly begin to make a lot of people whole. First measures towards making it 100% whole, making us 100% whole. But the reason why I bring that up is because this lawsuit would involve, if Tether was to engage and or defend themselves, that would open up the opportunity to look into Tether. It would certainly open up the opportunity to look into Tether and look into its books, which I think Tether just doesn't. They just don't want to do that. So it's looking like a settlement will probably be the thing. Look, for all Celsius harmed unsecured creditors, the more dollars we can get in, the better. For sure. I think we got like 180 million for preferential claims already that will be distributed out. So we can get, $500 million or more. That would be awesome. If we can get 200 or 300 million just from Tether, that would certainly help the cause for those who were harmed. And by the way, the biggest harm is Chapter 11 bankruptcy. That was the biggest harm, in my opinion. Well, second biggest harm, because it does not support the people who built the platform. Right, the depositors. It doesn't support them. It supports the corporate people. Yeah, it's a travesty for sure. For sure. What's going on, Alex G? How are you, bro? Bank Money XRP is in the building. What's good? Now, did I really do my live stream last night at the same time that Elon Musk was hooking up with Donald Trump? Did I really do that? I thought the thing was today. I thought the thing today was today, and I freaking did my live stream right in the middle of the Elon Musk, and Donald Trump thing. I don't know what I was thinking when I did that, but I did do that. So we got some stuff on Crypto X to go over as well. I got an interesting interview with Jeff Booth, the author of The Price of Tomorrow. He's actually being interviewed by the author of the Bitcoin Standard. So I want to get into that video as well. Maybe we'll hear from our guy, Taiki, as well on his thesis about Aave, because I think he got it right about MakerDAO token, considering what Grayscale is doing now with these trusts. All signs are pointing to rate cuts. And what rate cuts do to the digital asset space. It's a good thing. I don't need this Michael Saylor post. Let's get this Michael Saylor one out of here. So we'll talk about that as well, but it's looking like all signs are leading to rate cuts, Alex G, and that is generally a good thing for the digital asset space. It really, really is. Jonathan Vincent. Hey, Siege. What's up with you, Jonathan? Property Rich says this is a great time in Europe, right? So the ECB is cut already, right? And look at the cut. Are they looking to, is the ECB looking to cut even more, cut the rates even more? I think so. Appreciate you checking in, Property Rich. So we're gonna go over this. We're gonna go over the video. Aaron Bennett did the video. So we're gonna go over that video because he really kind of details it, which is really, really good. It's a few minutes, right? So grab your favorite libation. It's 10 minutes or so of the good stuff that we want to take a listen to. But again, for me, is Does Tether dare fight this in court, given I don't know if the US is going after Tether or not. To be honest with you, I don't feel like they are. I feel like the US is making sure Tether continues to do what it does, just under more regulations, because the Tether promotes the Ponzi scheme, which is the dollar fiat system, and it freaking, takes the treasuries to another exponential level. Exponential level. So TJ Jackson's in the building. How are you, bro? Celsius played me out of all my Flare. I should sue them. Now, did you make a claim for the Flare tokens? TJ Jackson, did you put your claim in for FLR tokens? Because you have to get that in the Stretto. You got to get that on record that you're claiming those FLR tokens. So I just don't think that Tether's going to do that, right? They're not going to do that. They're not going to do that. Yeah, too, TJ. I just decided not to re-up my loan. I was going to re-up the loan that I had, but I'm not going to re-up the loan only because I want to break that habit of dealing with centralized entities. Yeah, so our claims are probably third or fourth in line because they still haven't even distributed the regular distribution that has been approved. They still haven't even got all of those out yet. And then I think there's 2 more distributions, approved distributions by the court and all the parties, that hasn't taken place yet. So that's the issue. They are majorly behind for sure. So that's kind of really the real issue. But if you claimed it, right, which was very odd because there was nowhere to actually claim them, you had to do some other kind of thing. Then it's on that is on the record, and you should have gotten a receipt, an acknowledgement email saying that they received that claim, right? And you don't have to get the tokens right necessarily. How many FLR tokens? You don't have to necessarily get that right, but we want to have that on record that we are saying that no, these are our assets, because it's most likely that the estate is betting on people not making those claims. So yeah, you're right. Long road ahead for sure. So I do think that we're going to add to the coffers for distribution, because I don't think there's any way, shape, form, or fashion as Celsius, that Tether fights this in court and opens themselves up to having their books be having taken a look at those books. I don't see that at all. So let's go over this Aaron Bennett video here. Do I have it here as well? No. Okay. Let's take a look at this together. Again, this is important. I know it doesn't necessarily apply to all XRP holders. Welcome to the video, but it does to some. So let me make sure I get this right. We can only hope that the internet is going to work well. All right, so let's go here.
So in this video, I'm going to talk about the Celsius lawsuit against Tether, which could be a lot more money coming back into the estate. So I want to go through this document. So to start out, Celsius is trying to recover preferential, meaning clawback material, and fraudulent transfers of 39,542 Bitcoin. And they give a lot of proof that I'll cover in just a second about how a lot of these transfers were preferential, meaning done in the 90 days before Celsius declared bankruptcy. And also, Tether liquidated a lot of Bitcoin, which I'll cover in just a sec. That was done against the terms of the agreement between the two of them. So I'll get to all this in more detail. So starting out with some backstory, Celsius entered into a loan agreement allowing Celsius to borrow stablecoins, so USDT or the Euro stablecoin EURT. And Celsius was paying around 4 to 6% for their ability to borrow stablecoins. As Celsius was having problems leading up to the bankruptcy, Tether demanded that Celsius send them more Bitcoin to make sure that they were in good standing on their loan, and that equates to around 15,658 Bitcoin. And Celsius transferred even more Bitcoin during that window, 2,228, an additional 7,000 more Bitcoin, and then a lot of money, around 50 million plus of interest paid to Tether. Another huge issue is that the agreement, the loan agreement, allowed Celsius to deposit more collateral because as the price of Bitcoin was going down, Celsius needed to post more collateral to keep their loan in good standing, but Tether liquidated all of the collateral, and they did so without even allowing Celsius to give them more collateral. And they also liquidated these 39,000 Bitcoin, which is so much Bitcoin, at a price that is below the market value. So basically, Tether applied, meaning in this case, liquidated Celsius's property, 39,542 Bitcoin, to pay itself back for Celsius's outstanding loan. So let's go into more details about all this. This may be a longer video, but whatever. Like many other crypto companies, Celsius borrowed stablecoins to fund its day-to-day operations. February 1st, 2020, they entered into a token agreement, Celsius and Tether, which allowed Celsius to borrow USDT from Tether. So regarding the loan agreement, Tether basically wanted to give themselves permission to liquidate all of their collateral immediately if the value of that collateral dropped below a certain threshold. But they agreed upon, and there is a written agreement here, and this is one of the big things that I think Tether may have breached a contract regarding. The agreement that was signed by Tether and Celsius said that after Celsius got a notice that they need to post more collateral, Celsius would be provided 10 hours to satisfy the collateral demand. But what happened, which I'll get to, is that Tether liquidated the collateral without allowing Celsius to post collateral, even though they had it. And had they posted that additional collateral, billions of dollars would not have been liquidated. And that could have been billions of dollars that would have come back into the estate, which is crazy. So by the start of April 2022.
So just as important to know that we're talking in the month and year of the Chapter 11 bankruptcy thing. It was in this month that Celsius was trying to meet these liquidation things. It was in that month. I mean, literally days to a week, days to 10 days, something up to 2 weeks, something like that. And Tether decided to do the liquidation in spite of the signed contractual agreement. The interesting part, and you'll hear this in this video as well, is the Celsius did have the Bitcoin to meet the payment. They had it there. But Tether didn't care. So they just liquidated them anyway. And that liquidation at the time was and value of that BTC was apparently a couple of billion.
So a couple months before they declared bankruptcy, Celsius had $512 million in outstanding borrowings in USDT.
And this is the issue that I have with Celsius. I was with Celsius pretty much early days, but I mean, think about this, TJ Jackson. The highest value in assets under management for Celsius, I believe, was 2-something billion. 2.1, 2.3, I believe, at one time. I don't think it got to 3 billion. I really do think it was 2.1 or 2.3. But you have so that's at one time. So throughout the history, for whatever kind of period, was it 2 months that at 2.1 billion? Was it 3 months? Was it 90 days? Was it 6 months? Whatever. Throughout the history of the company, that was the highest. That was the most in assets under management. So how do you have a $500 million loan? Like a $500 million, right? Because if 2.1 was the most or 2.3 was the most, $500 million is right. That's right because you're cutting it drastically, majorly, massively close. There is no preparation here for some systemic event, which the systemic event ended up being Luna. So I mean, what if this a couple of months ago at 500 million, 2 months prior to them filing for the championship bachelor, what if they only had $1 billion in assets under management? What if it was less than $1 billion? You don't get your full, value of what you have on there to borrow. So that was massively, and I know what he was trying to do, but that was massively, massively risky. The absolutely heartbreaking part is they had the Bitcoin ready to deploy to avoid the whole Chapter 11 and weren't allowed to deposit it, which is what I mean by that is, according to the lawyers in this lawsuit, they weren't allowed to deposit it. They did so. Tether just took the Bitcoin and liquidated them. So, in any case, let's continue. Listen.
At the start of April 2022, Celsius posted or gave 16,505 Bitcoin to Tether as collateral to secure this $512 million loan. So in my brain, I'm like, they already knew they were in trouble. And they were basically trying to get liquidity to keep this thing afloat as the prices of crypto were declining heavily. As Bitcoin's price started to fall, Tether became concerned that it, like all other creditors, would be exposed to Celsius's insolvency. And here is how much Celsius transferred.
And that's the big issue. That is the big issue. Now they're still exposed to this because the lawsuit did come. I don't know what Tether was thinking. Like, I think Tether thought, we're going to get rid of this Bitcoin and we're liquidating this loan and we're cutting off our association. It's cut off. We liquidated, done. So because they don't want to be involved in any type of court proceedings at all, because they don't want to be on a creditor list. They don't want to have they want to avoid anything with them being and having their books be exposed. And they thought by doing this, it would help them, but it's not, because of course, they're going to get sued.
To Tether during the 547B period. So that would be the 90 days before bankruptcy. The same window that individual creditors are being currently is how much Celsius transferred to Tether during the 547B period. Creditors would be exposed to Celsius's insolvency. And here is how much Celsius transferred to Tether during the 547B period. So that would be the 90 days before bankruptcy. The same window that individual creditors are being currently sued by Celsius for withdrawing over $100,000. So right here, you can see from May to...
And just for anyone from Celsius who might be listening, the reason why the UCC pushed to move and pushed to do these clawbacks is so that they will be able to participate in the clawbacks. That's really the reason. It sucks that this is a law. This is a legal thing that can be done to creditors, to depositors, whatever. And this coming up with this number of 90 days, who knows where it came from, where the law and or courts are suggesting you had to have known something was going on. That's why you took your money out, and we're not going to allow that. That's what that is. It's this preferential clawback thing. And so people who took their money out, you know, 88 days, 2.5 months prior, 60 days, whatever. Maybe they just decided they were going to go to another platform. Maybe they decided they were just going to go full custody of their assets. Under the bankruptcy law, it doesn't matter. And that's why the whole idea of dealing with a centralized entity is the risk. It's the risk because the law protects them and it doesn't protect you. I mean, Celsius is not better off because they became insolvent. Obviously, you would want them to be successful, but they get a measure of protection that the people, the depositors, don't get under the law, right? So we need a revision of the law, because it's really, really, really brutal. But this is why I know there was ramblings going on back and forth, back and forth. Everyone's pissed about doing it to the retail. All right, so do it to the retail. Don't do it to the retail. Do it to, financial institutions. I mean, that's a tough argument in case to make. But anyway, this is why the UCC, which is supposed to be acting in concert and or for the creditors, unsecured creditors, is why they pushed to do it. They pushed to do it because they were going to push Tether with the same legal clause, this 547B period in this suit. So, in any case.
To June, couple thousand Bitcoin every couple June, right? The same window that individual creditors are being currently sued by Celsius for withdrawing over $100,000. So right here, you can see from May to June, a couple thousand Bitcoin. Every couple days or every money from Tether. April 20th, they borrowed $100 million. May 5th, Celsius borrowed $100 million. June 9th, they borrowed another $100 million. So a couple days before the freeze, Celsius borrowed $100 million. And I believe they were just trying to save the ship, right? And during this 90-day clawback period, Celsius made principal and interest payments totaling around 36 million euros or EURT and 18 million USDT. So they're saying here that Celsius was definitely insolvent when they were sending money to Tether, and they were building the case as to why any defenses that Tether could bring would not hold up in court. So on
Dealing with some internet issues, guys.
June 12th, 2022, Tether issued a collateral demand to Celsius. Celsius satisfied that collateral demand and transferred 3,000 Bitcoin to Tether. They then asked for more collateral. Celsius notified Tether that it was working on preparing Bitcoin to satisfy their demand, right? Because
Dang on internet.
basically the price of Bitcoin was going down, so you have to post more collateral to keep the loan healthy. And Celsius reminded Tether that it had 10 hours to do so under the amended token agreement, 10 hours to post more collateral. However, Tether's representatives demanded immediate payment, notwithstanding expressly acknowledging that Celsius have 10 hours in the agreement. So they said they have 10 hours, but they did not honor this 10-hour window. Essentially, Tether decided to proceed with an immediate application, or that would mean liquidation, of Celsius's collateral, regardless of the terms of the amended token agreement, basically their loan agreement, which required, again, a 10-hour waiting period before Tether could initiate liquidations. So they did not give Celsius the appropriate 10 hours. And that is one of the major issues or one of the major cases that Celsius is bringing. So within hours, all of Celsius's 39,542 Bitcoin that was used as collateral had been applied or liquidated by Tether. At the time, the dollar value of this 39,000 or so Bitcoin was around $816 million. But this is where it gets pretty crazy. So at the time of Tether's last collateral demand on June 13th, Celsius had sufficient Bitcoin on its balance sheet to post as collateral to Tether, including for at least the next 30 days. And this is pretty infuriating. If Celsius had been given the opportunity to meet the collateral demand, which it had the contractual right to do, it could have been able to avoid the disposition or disposal or liquidation, right, of its Bitcoin at near the bottom of the crypto market. Celsius could have retained their Bitcoin worth more than $2 billion today. Essentially, they could have met the demand. Tether wouldn't have liquidated their Bitcoin, which ironically dropped the price multiple thousands of dollars because they did so, or they liquidated it here in not a great way. Tether applied Celsius's Bitcoin, applied meaning liquidated, for an average price of around 20,656 bucks, considerably less than Bitcoin's market closing price on the same day of $22,000. So it's like you guys got $2,000 less, and they say they did so because they didn't liquidate it in a very intelligent way. So that is another thing that Celsius is going after them. So let's go through the causes of action really quick. We have these preferential transfers. These are the transfers that Celsius made to Tether to top up their loan, to pay the interest, to get new loans, all the Bitcoin that was sent to Tether in this 90-day 547B period. Again, this is the same window that retail clawbacks are being pursued under. And I do not agree with retail clawbacks at all. But Tether, I believe, definitely had inside information here. I mean, they are enormous market participants. They, if anybody, knew exactly what was happening with Celsius. Even so, they were receiving tons of Bitcoin, tens of thousands of dollars worth of Bitcoin, right? And I think that is a clear case for fraudulent and preferential transfers. So essentially, Celsius is demanding a recovery of their property. So plaintiffs, meaning Celsius, are entitled to receive a return of their property, 15,658 Bitcoin, 2,228 Bitcoin, and the 39,542 Bitcoin, either the actual Bitcoin or the value of such property. So the price of that Bitcoin today. And again, Tether.
Of course, it was, we don't need to go over there, but it is plus interest as well. So they're doing that on a plus interest thing as well. It'll be interesting to see how this is going to work for Tether. You know, Tether always claims that they have the reserves and they're backed. I mean, it was a guy at the Bitcoin conference, a major, you know, financial institution saying that they cover the reserves for Tether, et cetera, blah, blah, blah. Which is interesting. For me, Tether can, you know, Tether prints a bunch of Tether, right? They're making about 5 billion every 6 months. So that's what, roughly 10 billion a year. So it's going to be very interesting to see. I just, again, Assam, thank you. Assam says, appreciate your work. Thank you, my friend. Appreciate you checking in, Assam. Um, I just don't know. I don't see Tethers, fighting this and getting attorneys and going into court and doing some battle. Like, nah. A settlement, of course. Um, of course. Anything to not have their books taken a look at. You go to court, you go to a bankruptcy court, trustees getting involved and other people are going to get involved, and they will get a look at those books. They will get a look at books. And so I don't know who else is going to get involved with this suit. I don't know if the SEC will get involved in the suit or not. So it's going to be interesting to see, the next couple of months, 3 months going forward, what that's going to look like. Uh, I don't know about the whole US just trying to get rid of Tether so that they can have others be the players in the space. I mean, Tether is just buying up these treasuries at a record pace, and the government of the US needs that to continue to happen. And I don't know if anyone can, replace that in any kind of short form. So I don't know. We'll see. More monkey businesses. How can Celsius sue somebody when they're being liquidated? Well, they're not being liquidated. We're being liquidated. But they're part of the Chapter 11, right? And so remember, all of that stuff they have and I think you mean how do they have the expenses and stuff to kind of go forward with them? They have the depositors' money, right? So they have hundreds of millions of dollars to go sue someone. And I'm certain there's no, if we know that Tether is not wanting, because Tether keeps saying that they can't have their books fully looked at because they're not a bank or they're not this, and they keep making excuses for why they can't have like this full and complete type of audit. It's because they don't want to expose the books in a detailed way. The people at the UCC for Celsius, which is, the law firms, they know that, even though this is, Celsius and not the Celsius UCC, they know that they don't want to expose those books. And they honestly feel like they were wronged. And so we'll see. We'll see how that goes. I mean, if they haven't a written agreement, I mean, how do you determine whether or not they had the 10 hours or that they were not given the quote unquote 10 hours to meet the loan? Like, how do you know? I don't know how you judge that. I mean, everything's on the blockchain, but when did the 10 hours start? I don't know. It's going to be interesting to see how that goes. But anyway, I just want to share that Jungle Inc. did a video today about Tether, and they're shady, kind of, just doesn't seem. It feels shady. It feels like they're not opening the books the way that they can. Now, there's arguments out there, by the way, that neither is Circle. There's some people saying that the Circle audits are not genuine audits as well. So, I mean, like, who knows? But I will tell you one thing, we'll get a really, really big answer to whether Tether really wants to open up their books and really is willing to if they don't settle. Then you'll really know. Then you could put it to bed. You can really put it to bed then. Because if Tether says no, because Tether's response to this lawsuit is this is just noise. They're trying to strong arm us. They're going with that tactic. They're just trying to strong arm us. I mean, who's strong arming who? Who's 5 billion in profit every 6 months or right? No, no. It's Tether is the bully. Tether has the guns and the weapons and the ability to print money, right? Not Celsius, a company in Chapter 11. No way. No way. So that, to me, I think that puts to bed the whole idea of a true audit, right? Because that's the argument. I know Crypto Eddie makes this one argument, and the entertaining content creators make another argument that Tether is trying to do this, da, 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 da. And this will be a real true test, in my opinion. Like, right? Because they're asking for a couple billion, 39,000 Bitcoin, 15,000 Bitcoins, a lot of Bitcoins. Now, if you feel like this is bogus and you're not willing to pay that kind of money or don't want to pay it, you go to court, you defend, which would lead to them having to open up the books in full disclosure. And I don't see that. Do you see that, Hydro? I do not see Tether doing that. I don't see Tether doing that. So I'm hoping that the people over at Celsius, I don't know if it's Kirkland and Ellis, I don't know who's doing it, but I'm hoping that they see, is it the UCC doing it? I have no idea. I hope they can see through the BS and know that they have the leverage and that Tether does not want to be in front of a judge, be before the SEC, be before other regulators, and knowing that that would open the door for full discovery. Full discovery. So I hope the people that are suing understand that they have the leverage and they get absolutely as much as they can. That, don't think that you're on the offensive. You're not on the offensive. You're not on the defensive if you're suing Tether. You should be on the offensive because they do not want to do a true audit. They do not. Tether does not want to do a true audit, and they definitely do not want to be opening up their books so that the United States regulators can see. No. Because remember, the SEC is involved in this case, and so are state regulators as well. So, nah, I see definitely a settlement of some sort. And don't be settling for pennies. The challenge is to sue, to the expenses comes from what they're supposed to be distributing in the plan to the unsecured creditors. That's the challenge. The expenses to cover more monkey business, the expenses to go after that comes from money that they're supposed to be distributing to the people. So that's kind of the issue, right? How much do we spend to get this amount of money? Because, right, you know what I mean? That's the thing that Celsius, UCC, Celsius, whoever it is, they have to weigh that. They have to balance that. How much of this money, of this coffer, are we going to use to pursue this money over here, right? Because this money over here is supposed to be going to the people over here to do this thing. Now, they have a fund. It's a litigation fund already. It's for the litigation. It's not part of the distribution. And I think that money is 180 million is the numbers. So we'll see. I think that Tether will stonewall for a little bit, but ultimately, no way they walk into a courtroom, and no way they expose themselves to open up their books. I just don't see it. Just don't see how that happens. So that's the news. That's the word on the street. I did want to share it for those who might be still interested in that. Yosef says, yeah, Tether don't want to go before a court. Nope. What's going on, Yosef? How are you, bro? Guys, do me a favor, hit that like button on the way in. That'd be super, super cool. We always like to have just as many likes as we got viewers in the stream. Appreciate you guys being here on a Tuesday afternoon. Let's go over no. Let's go over the market, and then we're going to go over these conditions that I speak of. Why can't I just stop the share? That's okay. Yeah, we'll go over CoinGecko. But we're looking like we're going to get these rate cuts that we need, that are more beneficial to an alt season, I should say. I don't know, looks like we're going to get those to today's numbers, and we'll go over those CPI numbers and stuff like that. Yeah, I should have got more Bitcoin when it was at 58, and I didn't do it. Dang it. But anyway, I ended up putting that money in stables instead of Bitcoin. I should have done it in stables. I mean, Bitcoin. But anyway, so let's go over this. According to CoinGecko, let's go over these numbers real quick. We'll go over banner bubbles. This thing here, I tell you. What is this? We'll make sure these numbers are right, and I can't refresh it. Come on. From CoinGecko, 61K for Bitcoin is what it showed previously. Let's see if that's correct. All right. So according to CoinGecko, the total cryptocurrency market cap is up 1.8% in the last 24 hours and is currently at 2.24 trillion. Bitcoin dominance is 54, 5, 6, or 7%. To be honest with you, it's probably more closer to 57%. Bitcoin is trading at got under $1 there for Sui. Okay. All right, good. Bitcoin is trading at $61,402 again. On the 30-day, it is up 2.1%. Ethereum is at $2,700. On the 30-day, it's down 15%. Solana is at $148. On the 30-day, it's up 2.3%. XRP is at essentially 58 cents. On the 30-day, it's up 9%. It's up 9% on the 30-day. So interesting numbers. Sui on the 60-day is up 60%. Anyway, can't chase that stuff. I was looking for under $1. I was looking for under $1 for Sui. We're still checking the charts to see if, in fact, it is beginning to outdo Ethereum and outdo Solana. We haven't got the definitive word on that yet. Interesting. Canto over here, largest gainers, 49%. This is speaking to my guy, Taiki, who said what he said about Maker and Canto. He thought Canto was the bigger play. So is that 49% in 24 hours? Let's see. This Taiki guy is a really, really smart guy. 43 million in 24 hours. That's what it's done in 24 hours. Almost 50% in 24 hours. And that still has a 90% from its all-time high. Interesting. Very, very interesting. But my guy's smart. So anyway, all right. So those are the numbers. Let's go over to Banter Bubbles and see if you got some stuff that happens to be outperforming Bitcoin. Refresh that. Sats. Whoa. What is Sats? I feel like I just heard Sats. Interesting. It coming up here at 3,800% out of nowhere. So anyway, those that are out doing Bitcoin year to date, Dog with Hat at 25,000%. Meme coin on Solana. Brett, meme coin on base at 9,500%. Sats. I have no idea what Sats is. 38, essentially 3,900% over Bitcoin. Bomb, meme coin on Solana, 2,700%. And then there's Mantra on the bottom right at 1,929%. Again, I bring these up every day for people to look and consider my thesis, which is I believe that things that are outperforming Bitcoin year to date will continue to do so throughout the rest of this bull market. That's just my thesis. I don't have any stats or anything from the last alt season to look at that. That's kind of where I am today. So again, I don't know what Sats is. Maybe you guys can look up what Sats is. Look like it's some kind of Bitcoin thing, but it's interesting. Again, I don't know if this is a meme coin or not, to be honest with you, but it's just interesting that is just coming out. Also, side note, there can be stuff that you can type in here to look at that might not be on here. Like, for example, gamer hash token or gamer token, which I typed in, is actually at 600% year to date versus Bitcoin. 600, which I didn't know, which was a thing that we have, right? So if I type in gamer hash, no, now it's not. Now it's at 500%, 500%, 498 year to date compared to Bitcoin. All right. So here's Undo is an art. Well, let's go here. Let's go to Jasmy coin. It's an Internet of Thing play started being built by former Sony executives. Jasmy coin. Undo is the RWA play. Oh, let me go. Gamer hash is it's an AI play for compute power for gamers using their compute power for AI. That's what gamer hash is, that token. Now they have a gamer hash AI, but it's only available in the PC world. It's only available in the PC world. Which would mean you can do it on your phone or your PCs, from what I understand there. Undo is an RWA play. It's 131%. Ton, the open network, 115%. Which is like a V2, Web 2, Web 3 play. The open network, Ton. Solana, 191%, the retail chain. You gotta, and maybe you want to ask yourself, do I own any of these? And I'm not suggesting that you do go and own them. I'm not suggesting that. And maybe you want to ask yourself, was I fortunate enough to pick one of these, or two of these, or three of these? So we were fortunate enough to get Gamer Hash, fortunate enough to own Jasmy, even though we owned it later in this 150%. Gamer Hash and Jasmy were fortunate enough to own Undo. You know, Sats is gone, interestingly. I don't know. But anyway, Undo, Ton, Solana, we own Solana as well. Fortunate enough, right? Don't own any of the meme coins, though, so not that fortunate. Don't own any of those meme coins. And I know people in the channel do actually own those meme coins, which is absolutely a blessing. All right, so what else we got? We covered those. And I'm just covering 100% or more. Here's another meme coin, is Pepe at 185%. Marinate Solana, which is liquid staking of Solana on the Marinate platform, 211%. We own both, right? Marinate Solana and Solana. It's just, for me, it's the same thing. Arweave is just under 100% now at 97%. Fetch is at 106%, which is the I think Ocean Protocol, AI, and FET combined together for artificial super intelligence AI play. Floki is a meme coin. So you got Floki, Pepe, with Brett and Bonk, 5 meme coins. 5 freaking meme coins. And you notice that the other ones make up AI, and there's one RWA. There's BitTensor, an AI play. So we got BitTensor as an AI play, Fetch is an AI play. We've just moved out of 100%. It's at 97. So you got 2 AIs. You got 2 AI plays at 100% or more. And I'm only counting 100% or more. I'm not counting 70 or 90 or 80 or 60 or 10. So just understand that. Like for Arweave, it's 97%. That's an AI play. And here's Render over here at 38%. That's an AI play, technically. So the AIs technically are ahead of the RWAs. right? You got meme coins, and this is what we looked at: meme coins, AI slant gaming, right? Gamer hash, AI slant gaming. So it's a gaming AI play, and then RWAs. And so for us, we said, look, we're going to wait Bitcoin, Ethereum, Solana Maker. We're going to wait 90%, even if that means we're reportfolioing our portfolio. Then we're going to take our 10% and we're going to adjust it to the narratives that are winning. So we have a meme coin or two, but we have more of the RWA and plays and an AI play that we have to make here soon. And I don't know which one I'm going to go with. I don't know if I'm going to go with FET or BitTensor. I'm kind of boiling it down to two. Right? We got the gamer play. Do we go with FET, artificial superintelligence, which is three AI plays all in one there? How does that work? Is that a good thing or a bad thing? Is it strength in numbers? Will there be infighting, different views, different ways? And it's hugely important to be singular in focus and direction. Does that get messed up with something like FET? We got Ocean Protocol, we got AGI, and you got FET there. How does that dynamic look or work? That type of deal. So that's what I'm still kind of looking at there. Or do I just, say, well, you know what, I picked the wrong AI and let me just go all in on this gaming thing and go more into that 10%. So that's kind of where we are. Just wanted to share that with you guys. But again, there's about 20,000 and there's only about, since it's only about 20 in total that are doing 100% or more out. Wait a minute. No, there was only 13 total. And then there was 20 total, just any percentage at all out doing Bitcoin. 20. Any percentage at all, right? So you got 5 meme coins, you got 8 other assets, so that's 13. And then there were like 7 that were any kind of positive. So it's like 20, 21, like total out doing Bitcoin. And my thing is, did you get one of those? Did you pick a few of those? Do you have enough of those? What is SATS, Yosef? SATS says, Yosef says SATS is a sleeper. It will run this cycle. What is SATS? I have no idea. Small Business Doctor says Celsius needs to give up the Flare tokens. Yeah. Did you make your claim, Small Business Doctors, for those Flare tokens? You get it on the books, you get it on the record. Hydro says, I did my FLR survey. It's nice that you might win 500 FLR. Another incentive from Flare. Yeah, absolutely love it. I did it as well. Good for you. Good for you. You need a link? Well, did you do your regular claim? Like, because you had crypto on there? Small Business Doctors? If you had like your regular claim, you got to go back to that email and submit that claim and add Celsius in it. Yeah, you need to go back to that email and submit that claim. You can probably go to Stretto or to the website. I forget what the website is, the Stretto, Celsius, Stretto thing, and under claims, you can file another one there as well. But what you want is making sure you get a confirmation email that you submitted this claim. And I don't know if there's a time period to do it. I do know from speaking with a securities attorney that's, the estate may be trying to pull a fast one, and that if you don't claim it, you don't own it, right? If you don't say you have a right or an ownership to it, then the estate will just keep it. Did you get any stock? I never did. Oh, you never got any stock either? Yeah. I mean, I got a notice of some stock. from I don't know if it was Ionic Digital or the people that's holding it. I did get that. Yosef says going long on Rune also. Um, since a little earlier this morning. Since a little earlier this morning. So you like Thor chain? What is Sats though, bro? Hey, Yosef, are you following the Volt price sig thing? Is that just ordinals? I don't own any Sats, but is that just ordinals? Oh my God, look at that on the year. It's up 9,000, 8,300% on the year. Yeah, I'm not messing around with Sats. I am not messing around with Sats. 678 million. Mm-mm. Yeah, not for me. I mean, I'd be better off holding Ondu than holding Sats. And Ondu's like 2 billion. It's 10,000% up from the all-time low, which was in July. Interesting. Interesting. Ordinals. It's interesting to see that still doing well, considering we got the BRC20s now. It's interesting to see that still doing well. But good for you. You have some. Oh, you said you just took a play. No, you took a play on Rune, Thor chain this morning. So have you looked at the Volti SIG thing, Yosef? Have you looked at the Volti SIG? Yeah, yeah, you need to follow Aaron Bennett, Small Business Doctors. Go to Aaron Bennett's YouTube channel and just watch his stuff. He supplies all the links as well. Where is that at? He supplies all the links to different stuff. Just go through his video. Oh, you do follow him? Yeah. Oh, he has all the links on any type of thing that you would need there. You just got to find the right video to check that out. All right. So what else do I want to cover? Oh, the market. All these things lining up for rate cuts. Our guy, Gareth Soloway, did a post on X. It's right here. It's kind of short, simple, short and sweet to the point. PPI month over month comes in better than expected at 0.1 versus 0.2%, which was expected. PPI year over year comes in better than expected at 2.2% versus 2.3% expected. Clears the runway for the Fed to cut in September if the CPI tomorrow confirms. Mario Nafal shared this. ECB to cut rates twice more in 2024. A poll predicts. So we'll see how that goes. And of course, you know, these guys, they all act in concert. They all come together and they talk and they meet and they discuss the strategies to continue the central banking Ponzi scheme. The European Central Bank is expected to deliver 2 more 25 basis point rate cuts this year in September and December. This contrasts with market expectations of 4 cuts by the year end. The deposit rate is predicted to reach 3.25% by December. Despite recent Eurozone inflation rising unexpectedly in July, economists remain cautious, with the majority not anticipating a more aggressive approach from the ECB. The outlook suggests the ECB will trend carefully amid steady economic activity and near record low employment. The source there is Reuters. So again, they're aligning and they're doing things in concert. Genevieve said this as well. Good morning, everyone. July's producer price index came in lower than expected, rising just 0.1 versus 0.2 month over month. This gives the Fed more confidence that inflation is cooling, strengthens the case for rate cuts. All eyes on tomorrow's CPI. Exactly. And the guy from Real Vision shares this, I think it's hugely important to notice, and hugely important. In a debt-based fractional reserve financial system, the money supply must continually expand to support the outstanding debt. Otherwise, everything will collapse. This is the natural state. Let me read that again. In a debt-based fractional reserve financial system, the money supply must continually expand to support the outstanding debt. Otherwise, everything will collapse. This is the natural state. Forgot about him, LOL. Did you figure out STAIR finance? What's STAIR finance? Small business doctors. That's right, fam. Like Small Business Doctor says, like, subscribe, and share the video. That would be awesome, awesome, awesome. Thank you, Small Business Doctors. I appreciate that. Guys, do me a favor, hit that like button. It's one of the best ways to support the channel, and also to get the channel out to more people hanging out there, not aware that there's a new financial system being built right underneath their noses. It's called the digital asset space. All right, so I wanted to share this video just real quickly here from my guy, Jeff Booth, of the author of the book, The Price of Tomorrow. And it's a really great, perspective thing. He's being interviewed. I'm hesitant to play it because of the internet, but he's being interviewed by the author of the book, The Bitcoin Standard by Safadine Amos.
You think, or, I mean, maybe it could be startups or software or whatever it is. What?
I'm trying to think where I really want to start. I was really intrigued by the minute 23. And again, I just think it's beneficial for us as in our goal and quest to become sophisticated investors, that we gain different perspectives. This guy's a successful entrepreneur in the tech space. Obviously, he's a Bitcoiner. Why does he think Bitcoin and all that stuff around it that's being built and deployed and whatever is important? And Crypto Eddie has a title to a video. I'm trying to understand. XRP deployment. Flare deployment unchanged. XRP. Anyway. And the title of her video, I'm gonna check it out here, says the stablecoin is Ripple stablecoin called out by the SEC as unregistered. So did you guys hear about that? Anyway, different perspective from Jeff Booth, the author of the book, The Promise of Tomorrow. Highly encourage you to read it. It's a great read. What happened here? I went to minute. Let's go here, minute 23. Let's go right there.
And it's an economic and no oracle on top of it within Bitcoin will work.
that'll move to the second or third layers. So just because the cost to introduce an oracle, like you said, is too high. All of these companies are going to fail. All they're just going to do is help miners distribute more. So I don't see that as any sort of attack factor that I'm worried about whatsoever. How I think about it is, I would tell everybody that Bitcoin is going to be a core part of the US dollar.
Oh, so the question was, if you wanted to keep the fiat dollar Ponzi central banking scheme running, what would you do to keep that running?
And I would tell everybody that Bitcoin is going to be a core part of the US dollar. And I would move from, and I would convince people that US dollar and Bitcoin are synonymous. And I would use the money printing that I would be allowed to do through Tether to be able to fund the US Treasury further. And convince people to pay in the second layer, US dollar around the world and other currencies around the world. And I'd arbitrage the spread between Bitcoin and that. And it would create a massive money-making machine to be able to convince people to do it more. And as everybody was using this new layer.
He calls it a new layer because he believes Bitcoin is it. It's the layer. Does it feel like we've been hearing something like this? Does it feel like we've been hearing more companies put fiat and do the Michael Saylor strategy? Or do you feel like there's less of that going on? Do you feel like there's more going on and talk around Bitcoin being put on balance sheets of governments, or less of that going on? Like, I feel like there's more talk of that going on. And what he's suggesting here is that's the way that you co-opt, get yourself in position to co-opt and or manipulate the Bitcoin by doing this. And this is exactly the way I see it. This is what is going on.
On top of Bitcoin, which would centralize naturally, because it has to, because the free market is deflationary and this one's inflationary, so it has to centralize more.
The Bitcoin Stand-Up Podcast is brought to you by Orange Pill app, the Bitcoin-only social network that connects
with instruments. Nobody would know how much Bitcoin there actually was, and you'd be using this second layer, and I think the amount of people that are falling into a trap of US dollar on Bitcoin instead of native Bitcoin spending in Bitcoin, because they want their price of Bitcoin to go up in US dollars versus the free market, which allows all prices to fall, would be so overwhelmingly strong. And then
it's an interesting concept, right? He is saying that the idea of getting your Bitcoin, holding on to your Bitcoin, wanting the dollar value of your Bitcoin to go up is inferior to getting your Bitcoin, using your Bitcoin, and spending your Bitcoin to make Bitcoin more of a medium of exchange. So that's what he is suggesting. He's suggesting that one idea is better for Bitcoin overall than the other. Because he believes that the whole idea of holding a Bitcoin, and he said this on a video, he believes that Michael Saylor is completely wrong and going around preaching, never ever spend your Bitcoin. And he said that on video. He said it in an interview with Natalie Brunell not too long ago. I listened to that about a month ago, maybe 5 weeks ago. He believes that Saylor is absolutely wrong on that. And it's mainly because of the mindset of still thinking in the dollar fiat system world, as opposed to the kind of the Bitcoin thinking, where he says everything is deflationary and things go down in price as related to Bitcoin. Because he just believes that in a free market, everything is deflationary and the prices of stuff go down and your lifestyle is better because of it. It's an interesting thought process. And again, I'm listening to his stuff to just get a perspective. And then I'll come to my own conclusion, but I want to get my own perspectives, right? I want to get some different viewpoints because I'm an investor looking to become a sophisticated investor. What are the flaws in that thinking? What are the good things in that thinking? Does that type of thinking make sense? Can we ever get to something like that? What's the hurdle to a thing, to a concept like that? Overall, is that a better thing for all of us or not? Are we hiding behind fears that this thing can never happen because they won't let it happen? You know, all these kind of things and questions come up when you look around, pop your head outside of the bubble and take a look around at different perspectives, right? Gain a different perspective.
Other countries would be doing the same thing, pegged to US dollar, and they would be using these stable coins. And all a stable coin is something guaranteed to lose money against Bitcoin.
That is an interesting thing. All a stable coin is a thing guaranteed to lose money against Bitcoin.
Right, with less volatility, right? But a guaranteed loss against Bitcoin, and then through that you would consolidate layer 2.
And so how do you see that consolidation happening in practical sense?
So this is happening right now. This is how people all over the world use Tether. People all over they don't actually use Bitcoin. Tether has to be part of the state apparatus. Right? You wouldn't allow something like that to work with that much power. Now you have senators and such advocating for stable coins of US dollars on top of Bitcoin, right? Because you need the money from that to fund the treasury. Remember that whole system, that inflationary system, has to centralize. We're talking about the same centralization. All you've done, if that's what that looks like, is you've moved from gold, which was co-opted, to the petrodollar system, which is co-opted, to the Bitcoin system, which would be co-opted. And this is why you asked about FEDI. This was our investment thesis in FEDI 2 years ago, or 2.5 years ago, and our investment thesis in Lightning, Breeze, and what Roy is doing and other companies in the space, because Bitcoin needed to be native to be able to create the world where our prices fall and human abundance thrives. But if you're measuring Bitcoin in price of US dollars go up, then you're actually playing into that trap.
So anyway, I'm going to pause that there because I want to get to the chat, because it's another part that I want to play, but I think it's hugely important. Why go back into fiat? Why go back into fiat? You can buy whatever you need with Bitcoin. If you're getting 50% year over year, plus a 3 to 5x every 4 years, it's beating inflation plus a great return. This is exactly what we've been saying on the channel for a while now, Joseph. That is exactly right. That is exactly correct. And I just think that there is a thing where it's just the vast majority of people don't understand. The vast majority of people don't understand that they're not in conditions that promote one's ability to think for themselves. It's amazing to see the people. Amazing to see the people on X losing their minds. I mean, losing their minds over politics. Like, it's amazing. And they don't know. Google did a movie and shared the movie to tell people what they actually do to manipulate their thinking. Told them. No. This is what we do. This is what we have in place. This is how it works. It is a manipulation of your thinking. People watched the movie and said, "Oh my God, that's scary," and then they went right back to it. That's exactly right. That's oh my God. That's exactly right. Right. So Joseph said the name of the game is use the alts to make as much profit as possible and purchase Bitcoin. This is what I've been trying to say without giving financial advice, right? This is Joseph saying this. This is what I've been doing these videos, right? And kind of sharing what we were doing. And I kept referencing the ethos back in the 2016, 2017 days. The name of the game, says Joseph, is use the alts to make as much profit as possible and purchase Bitcoin. Maybe only hold 4 or 5 alts. Sell everything else based on the cycles. And based on the cycles is what's going on in the cycles. Right? What's going on in those cycles right now? Maybe those are the 4 or 5 alts you want to hold because that's what's going on in the cycle. And maybe what's not going on in the cycle is utility tokens or this quote unquote ICO token thing. That's just, I don't know where it came from, how it came from. Right? That's the game. He says it right there. The name of the game. This is it. Know the game that you're in. Right? Know the game that you're in. And for me, until I hear from BlackRock, now don't get it twisted. BlackRock is playing in a space that is very, very comfortable with the ETFs. But it's a reason why they went tokenization. And it doesn't have to win. It just has to be a winner. Right? Because what's the win right now? The win is meme coins. Do you think BlackRock's going to be doing that? No. So it doesn't have to be the one. It has to be one that is winning. in RWAs, tokenization, is the one he chose. And if it's the one that he chose, they chose, it means it's going to be a winner. Right? It's going to be a winner. It's going to be that 4, 5, 7x thing. You know, that type of deal like that, right? And so that's a good point, Yosef. The Muskegon aristocrat, Quincy Jones, the developer on XDC, goes in depth into evaluating these concepts. Yeah, he does. He's a smart guy, for sure. He's definitely a smart guy. He understands technology. There's a difference between understanding technology and understanding how the world works, right? That's a different thing, right? So, again, Jeff Booth, different kind of perspective on what's going on. I'm going to play another segment of this video with this interview. These are two authors from two different books. I meant we can't forget the original reason why we came into crypto. Yeah. Ultimately, you know, it's to create wealth and create and hopefully create generational wealth. But the market has made a decision, right? And it's not the market has made a decision, right? The market made a decision the same way that the market made a decision towards Ripple when they looked to take their products off chain into the marketplace. And the market made the decision. The market did. They made a decision. You know, we're kind of good. Maybe too early. I don't know. Maybe not wanting to take up the fight. Maybe whatever it is. It is. So they had to figure out a different way. They tried to do the small mini enterprise things and all that different kind of stuff like that. And now they're going to do what I think is going to be the win, and they're going to go on chain. That's my opinion. But the market decides this kind of stuff. I mean, people try to rationalize why Bitcoin is where it is and why it is, instead of saying Bitcoin is where it is. And then leveraging that. But there's a bigger picture, I believe, and we're going to share the bigger picture. Safadine is actually going to share the bigger picture, in my opinion, to all of this. In my opinion. Let's see here. I'm going down to the 1 hour mark, and he's going to ask an interesting question. Safadine is, and he's going to say something that I was glad that he said, but it was interesting that he brought it up. Let's go right there.
Cost innovation that keeps on driving that protocol. So open protocols win. And what you're saying is these protocols coming together, or in layers, these coming together, are driving an explosion of new opportunities, which will make this better.
Okay, it would help if I shared, huh? What the world? It would help if I shared.
Faster, cheaper, in ways people can't even imagine today.
Yeah. Yeah, I mean, it's going to have to over time just prove itself out from the fact that it doesn't have the centralization risk that is going to create all kinds of slippery bananas along the way for all of the current incumbents in the social media game.
Yeah. And that centralization risk is one. So, and you know from some of my work before, a new company needs 10x improvement over an established incumbent to even have a chance of success. And so if your only improvement on Nostr in the early going is I have less risk of getting deplatformed against Twitter, it's not enough to be able to move people. But what's happening now is you're integrating Bitcoin into it or payments into it natively, and you're adding more and more advantage, which then all of a sudden people say, oh my God, I have everything here. And so much more than I had on Twitter. And that's where we're really early in that, really early in that today.
All right, what other things do you look forward to in the Bitcoin space? What other things excite you, and you think, or, I mean, maybe it could be startups or software or whatever it is.
Well, I think Lightning. I think what Roy is doing over at Breeze. I think that's you have largely unknown. You have tons of capital chasing L2s from the existing system, wanting to create a token, venture capital creating a token on top of Bitcoin. And I just think if you've lived your entire life in a world of financialization, and that's been your source of wealth, then you want to financialize more. And from that world, if you know, to deconstruct what's happening, so what we already talked about early in the show, that your house shouldn't be the value it's at. It's the value it is at because of the money printing. And so in that money printing and the debt attached to that means the amount of debt in the world is so outrageous. Which, if the debt defaulted, the house wouldn't be nearly worth what it is. Right? So the house value would collapse. So if you allowed deflation from that system, everything would collapse. And so from that, you know that you're way overpaying and have way too much debt into a house, because in Bitcoin terms, the house is falling to its marginal cost of production. Right, or its utility. Let's use, instead of marginal cost of production in a house, let's use utility value. Instead of a store of value against debasing currencies, it's falling to its utility value, what you want to pay for a house to enjoy it with your family. And so if you're measuring from the fiat world, you're measuring, I need more debts and everything else to be able to put up, and that you're in the financialization game. If you're measuring from the Bitcoin world, it's falling to its utility value. And lots of people in Bitcoiners will buy houses on the way as they keep falling to the utility value with their Bitcoin. So they'll be overpaying in Bitcoin for those because they want that today. So that's going to happen, and it's going to distribute Bitcoin more and more through that process. But you can say one system's way over leveraged, requires financialization. One system doesn't require the leverage, prices are falling against it. That means a total differentiation as debt gets destroyed, and real wealth gets built on the Bitcoin system, and yet debt gets destroyed, and everybody grabs that debt at whatever type of level they want as it gets destroyed through inflation or deflation. But that's going to happen. It means the last 30, 40, 50 years, maybe more than that, we've lived, all money has been made through financialization. All of it. So if you've made all your money through financialization, then seeing Bitcoin and how to financialize it further, put houses on the blockchain, put different tokens on the blockchain, it would make perfect sense. If you see Bitcoin through it's repricing the world, and all prices are falling relative to it, that would make perfect sense. And those two constructs are defining where people are investing. Where we're investing, is we have a view that the return rate of Bitcoin over the next 15 years is going to be between 40 and 45% IRR. Mm-hmm. So the only place you would invest is where can you beat that return rate? Because that's the true free market, and the only free market we've ever seen that's in Bitcoin. So where would you beat that? The only way to beat it, and over the long term, is to build companies that are providing value on top of Bitcoin, and then and by that value accruing more Bitcoin on their balance sheets and building. And so they're growing extraordinarily fast and building, and by providing value and building Bitcoin on their balance sheets. So from there, we think what we're doing in Ego Death Capital is getting venture returns on top of a venture asset by fully embracing the free market that is Bitcoin.
Yeah, that is a very, it is a very challenging thing. I think people being able to get a positive return on Bitcoin in Bitcoin terms is always going to be a challenge. And so, yeah, but I think one way to do it is to
It's pausing. Am I pausing?
go to Bitcoin denominated companies.
I don't know if this thing ever come back on or what.
I don't know if this thing ever come back on or what.
Well, I guess it did.
I don't know if this thing ever come back on or what.
Well, I guess it did.
I don't know if this thing ever come back on or what. I guess.
I don't know what happened there, but I think you guys are back. Are we back? Can you guys hear me okay? It says it's still going. Make sure you guys can hear me. Can you guys hear me? Make sure you guys can. I want to play this last part.
Fully embracing the free.
It's just like my whole computer restarted all on its own.
Market that is Bitcoin.
Yeah, that is a very, it is a very challenging thing. I think people being able to get a positive return on Bitcoin in Bitcoin terms is always going to be a challenge. And so, yeah, but I think one way to do it is to go to Bitcoin denominated companies, as you say, because then at least they're kind of cheating by.
Yeah, because why would it be a challenge, right? So use a different example, just in a different day. So if you were in Argentina in 1999 or 2000 when Google started, and Google came to you and said, you can invest your Argentina peso into my tech company that's denominated in US currency, that'd be a pretty good trade. Right, you had the growth of the tech company across the tech internet space that was exploding. Plus you had the change in your Argentina currency to US currency, which did far better than your Argentina currency. Why would that trade be any different than what's happening today to Bitcoin? It's exactly the same thing. It's exactly the same thing. It's just people are so used to the US currency. They're pricing in the US currency and we're pricing in Bitcoin.
Yeah, absolutely. Yeah, it's just the way that I see it, the way that it would be difficult is that, or the reason that it is difficult is that I think of it as being like early stage venture capital, investing in something that is a startup that is out there disrupting central banks. And that's going to have to be very, very profitable because there are, in my opinion, no problems more pressing in the world than putting central banks out of business. So every time anybody gets into Bitcoin, you are, as a Bitcoin holder, as somebody who's in buying the tokens, you're effectively profiting from the growth of the company. It's not a company, it's obviously a decentralized protocol, but it functions like a startup, where instead of having stocks and having dividends, the stock, or the closest thing that we have to the stock, is to hold the asset itself, because everybody has to use the asset. And so more people get into this kind of spontaneous conspiracy to build a startup that disrupts and replaces central banks. The more people get into it, the more that startup is providing value. And so the more people that bought it.
Interesting that he believes that this is Bitcoin is like a startup that's created to disrupt and dismantle central banks.
In earlier benefit from it. And what this is telling you right now is, and of course, there's no yield, so you can't say that this is a Ponzi, because the yield can't continue to grow. The problem with the Ponzi scheme is that the yield cannot continue to keep up with the growth. But here in Bitcoin, there is no yield. The yield's always zero. So there is no reason for it to ever stop offering the same kind of increase in valuation, which is the only kind of return that it offers, and that the Bitcoin asset itself appreciates. So what this is saying in my mind is that it's difficult to beat this, because it's difficult to find a business idea that is better for humanity than putting central banks out of business. I think this is just the most profitable thing you could possibly do.
The most profitable thing that you can possibly do is to put the central banking business, the central banking system, out of business. How cool is that, to be able to do that and benefit from it? That would be really, really cool. Yeah, and I agree with you too as well, Yosef. The ISO thing is, they're early, right? And so the idea is, I tell people this all the time in business, you can't start from where it is that you want to be. You have to start from where you are, right? And this is what the market is saying. The market is saying, this is it, right? There's statistical data that shows meme coins, AI/gaming, meme coins, AI/gaming, and RWAs, right? And that's kind of where the market is. Doesn't mean that's where it'll be in 2030. Meme coins might be a done toast deal in 2030. You never know. But the idea is we have to start from where it is that we are. The awesome thing is, we don't have to make the same mistake as people did in 2013. Right? As that dude made in 2013, where he decided to choose an ideology over sound investing principles, right? In 2013, not nearly as many to choose from. Not nearly as many to choose from in 2013. Even not as much, nowhere near as much in 2017. 2013 certainly had very little to choose. And you had an option to choose both, and you chose one. In 2024, we have options to choose. And we have significantly more data that help us in our choosing. And maybe in the back of the mind, we're like, okay, you can still own XRP and XLM and XDC. But what does that look like in terms of your portfolio? Imagine a portfolio of those tokens and none of the market that is saying, this is what we're going to pay you on today. I don't know. Imagine that. A portfolio of what might come, full of what might come, and none of what's happening today. Right? And I always tell people in the end, it's not right or wrong, right? In the end is show me the numbers, not the story of payments or a reserve currency. Show me your numbers today. How are you doing? How are you doing today? You've been in the space since 2017, and everyone must ask themselves, how are we doing? How are we doing? What does it look like? How are we doing? And right now, there's a group of people that since 2013 or 2017 who can say pretty good. And that's Bitcoiners and people who own Ethereum. They can say pretty good. Right? Right? The numbers tell you the whole story. That's the thing I love. That's the thing I love the most. And it's an awesome revelation when you get there and you understand that, because then you can begin to adjust accordingly. If an asset is outdoing Bitcoin and it shows you that it's outdoing it, like Ethereum back was outgrowing, outpacing Bitcoin. Solana is now outpacing Ethereum, right? Those are like those, you can see that. That's the deal. And you can see the numbers. And then you can, what do they call that? Reverse engineer why that is, right? You just reverse engineer why that is. Okay, that's it. It's this thing down here of daily active users, network adoption, that kind of formula. And then because the charts just show you, the charts is just a representation that the formula is working, right? Right, the chart is not going to show network adoption and daily active users if this formula here is not in place and they're winning in the formula for whatever reason they got, whatever strategy they got going on. It's interesting. It's interesting to see Flare at 22 million in TVL. It's interesting. And of course, some of that is because of emissions programs, flare drops. Of course, some of that is because of that. But there's other things as well, right? The end, obviously, you have to have some great technology for what? What's the technology for? It's for sustainability. You got to have good technology, tokenomics model for sustainability, of course. But you got to find a way to garner network adoption, daily active users. And in the end, if you could say, okay, this blockchain has this much in TVL, and it's been around since 2012, I just say, when do you stop making excuses for why that is? And just accept that is the number. Right? You got to just accept that's the number. Yeah, 2026, that's going to be the year of accumulation, Yosef. That'll be the year of accumulation, right? That's why I say I can't wait to see what's going to happen on the XRPL in the coming months. I can't wait to see the stablecoin launch. I can't wait to see the liquidity pools with a next level liquidity incentive event. How many people are peeping what Flare Networks is doing? They got a flare drops going on. They got emissions going on. How many people paid attention to the survey? How many surveys have you got on the XRPL? Some people say, oh, yeah, it's just a survey. Is it? Is it just a survey that Flare put out? Or is it a way to garner attention, to create network adoption? I don't know. Maybe the people over there at Ripple did in-house surveys. Maybe. All right, fam. There it is. I'm gonna wrap it up. I appreciate you guys checking in for sure. And just know that you are valued. And there's something about going to where your assets are treated best. Just something about that works in the digital asset space. Going to where your assets are treated best. And where you as an asset holder are valued. Something about it, something to consider. All right, fam. Thank you so much for hanging out. I appreciate you guys. As always, been a really, really cool hang for sure. You're welcome, Hydro. You're absolutely welcome. Yosef, thanks for checking in, my dude. It's been a really good back and forth for sure. The Muskegon Aristocrat, I appreciate you checking in. Small Business Doctors, always appreciate you. JR, I miss you checking in, brother. I appreciate you checking in. More Monkey Business, thanks for hanging out today, my guy. Isam, thanks for checking in. Leo Messi checked in with BTC at 61,400. How are you, bro? Appreciate you checking in. TJ Jackson, as always, appreciate you checking in. Property Rich, Jonathan Vincent, and Alexi, the Blue Renters. I appreciate you guys checking in. I'm going to end this live stream. Oh, by the way, do me a favor, hit that like button if you didn't do so on the way in. It would be super awesome if you could do it on the way out. That would be awesome. And if you're hanging out in that 50% or so of people who are listening to and hanging out and watching the Crypto Season who haven't subscribed to the channel, you can hit that subscribe button right now. That would be awesome. We're trying to get that number down from 50% to about 25% or so. That would be really, really cool if you could make that happen. And join us on a journey to that mad rush to 10,000, where I will begin to do the interview thing and bring some awesome interviews to you guys. It'll be a new journey for me as well. Looking forward to doing that. All right, I'm going to end this live stream like I do all my live stream, guys, and remind you guys of this. Old money doesn't want you to win, but that's okay though, because you and I, we're already winning. And I would ask you to consider this, perhaps ponder the idea or notion of living your life permissionless. I'll talk to you guys soon. See ya. Bye.